You finally made it to the closing table. Congratulations. Many people played a significant role in getting you to the closing table. Do you know who they are and what role they played? Welcome to my Who's Who at the closing table. I'm Zebby Amy Voss, licensed real estate salesperson, and I am here today with one of my favorite subject matter experts, Jennifer Crowley from Anywhere Insurance Agency. Now, you likely won't see Jennifer at the closing table. However, she plays a starring role. Jennifer, thank you so much for being here to talk insurance today.
Oh, thank you for having me, Zeb. I'm excited.
Jennifer, what is insurance?
So basically, insurance is the protection for your most valuable asset. You just bought this big home, right? So we want to make sure it's covered properly when anything goes wrong. Okay. Fire, theft, burglary, tree falling on the house, water damage, things like that can go wrong, and the insurance will pay, so it's not out of your pocket. And all of that expense on you.
When you're at the closing table, what if something happens and my clients show up and the lender is there and they don't have insurance? They didn't get their home insurance. Will the closing happen?
No, they won't get a clear to close until they provide that insurance. And sometimes, depending on the lender, they're requesting that 2 weeks prior, a week prior. So it will depend on the lender that they're working with.
Is the insurance actually protecting the bank or is it protecting my clients?
So the insurance is protecting your clients, but the bank is requiring it to protect their investments.
Okay.
So the bank is giving you money to buy the structure.
Okay.
They're going to require that house get rebuilt in the event of a loss because that's what they're valuing on.
Got it.
The other parts of the insurance policy, though, are your contents, your personal liability, money to put you in a hotel while your house is being rebuilt.
That's important. Yeah.
So that's important to you, but the lender doesn't care about those pieces. They just get the building rebuilt, and that's their primary concern.
Got it. Okay. So when we think about insurance, we're wanting to think about the structure itself and the bank's wanting to protect its asset and its interest in that asset.
Yep.
But then there's all of the other stuff inside of the house that the bank doesn't care about that my clients need insurance.
To the owner.
Yeah, got it. Okay, good. What if my clients decide to pay cash? Do they still need insurance?
Yes, because they're paying cash for the actual house, but they might not want to self-insure for anything that can go wrong with it in the future.
Okay.
So by transferring that risk to the insurance company, you're paying an annual premium, but that insurance company is going to be paying the hundreds of thousands of millions of dollars, depending on the value of the home when something goes wrong.
I find oftentimes we think, oh, I'm paying, if I have a cash client, I'm paying cash, I don't have to worry about this. But the reality is that cash, because there's no lender doing due diligence of their own, when you're paying cash, you're much more exposed. As soon as I'm in contract, I set up a whole series of prompts and automations and sort of pinging people to make sure, do you have this done? Do you have this done? Do you have this done? And especially with cash clients, because there's nobody else to make sure they're getting it done. My cash people actually need more coverage and protection at times with someone overseeing all of these elements, these moving parts before the closing. So.
And with the cash purchasers, again, because that lender isn't sticking to their timeline, I need this by this or we can't go forward.
Oh, good point.
I will get calls for cash customers. All of a sudden it occurred to me I'm closing tomorrow and I didn't get my insurance.
Yeah.
The problem with that is that there might be some underwriting delays that I need to review this risk before you can submit this policy. So anything that I have to send to an underwriter, it could take 24 to 48 hours for them to review it. So you do not want to wait to the last minute and just assume it's something you can just grab and go.
Here in Westchester and in the New York region where we work, we have loads of different types of properties, as you know. We have condos, we have co-ops, we have single family homes, we have PUDs, we have, you name it, we have all these different types of things. So what are some of the sort of most major differences between insuring, say, a condo versus a single family home versus a co-op?
So the condo co-op form is very similar. We're concerned about the one unit within a bigger building. The single family home, we're concerned with everything. There's no other policy to call on.
Got it.
So say there's a fire, you lose everything. When it's a condo or a co-op, there's another policy that's rebuilding the main building. We're only concerned with the walls in, the flooring, the cabinets. We're not concerned with rebuilding the entire structure. We're a single family home. If my house is leveled in a fire, I have to build everything, framing, foundation up to the roof again. There are different ways that master policy, let's call it, can cover. Some of them only
master
do
policy
outside.
Is the building's policy.
The building policy that's available to all unit owners. Some of them only cover the outside. That's it.
Okay.
Some of them will cover the inside to original specs.
Okay.
So say the unit had wall-to-wall carpet and laminate counters, and you've upgraded to hardwood and granite, and then there's a fire.
Okay.
My question is, are they putting back the laminate, or are they putting back your upgraded granite?
Wow.
So that could be different depending on the association and the property.
Okay.
And then some of them, you know, they do cover everything inside, including those betterments, and you're really just responsible for your deductible.
Whose job is it to look at the master policy before closing to see if there needs to be additional coverage?
Lenders will, because it's their requirement that the building's covered. So if there's a gap in the master, they're going to require you to get this HO6 unit owner policy.
Got it.
And this is another thing where I find where people call and get their own quotes. The other person on the other side of that phone is not doing as in-depth of a questionnaire like I do. Right. So I will quote it both ways. Yeah. Worst case, you're responsible for everything inside, and that is $250,000. Best case, they cover everything and you're responsible for $25,000. Okay. Here are the different numbers. Let's wait and confirm. Okay. Instead of grabbing the wrong one, you're either going to pay for coverage you're never going to end up using because it's covered somewhere else, which why waste your money? Right. Or you're going to take a policy with a huge gap and not find out until there's a loss that this is out of your pocket.
You're not going to have a bank saying, oh, you need this extra coverage, right? But Jennifer can look at those policies and identify in the master policy where the gaps are. What sorts of things affect a person's premium?
So rating variables of the individual. Okay. You and I can buy the same house and get completely different rates for insurance. Yeah, okay. Right? So we will have to ask, are you single or are you married? Okay. Are there children in the house? Yeah. How many people live in the home? Is it your primary home or is it a rental property or just a property you have as a secondary home? Your occupation, your education, these are all rating factors. Your insurance score, your claims history. Right. Then we have the house itself.
Yes. Okay.
So antique homes. Not every company is willing to insure an antique home. If the insurance company cannot come in and quickly put it back and let you get back in your home, those are added expenses that are incurred, and just some companies are not willing. We don't want that. Send that to someone else. Other things that come into play with the houses, wood shingled roofs versus an asphalt shingle or a metal roof. Okay. How old is the roof? What is the condition of the roof? Heating systems, they need to be updated. They need to be replaced within 25 years or so. Okay. Is there a swimming pool? Diving board, slide, trampolines. I could have trampolines. We don't like the risk of the liability of you having a trampoline and inviting all the neighborhood kids over to break their leg on it.
Oh my gosh.
Because you could be sued because somebody got injured. Right. So it's not a property loss, it's
pay
a
to play.
liability.
Yeah. Okay. We run into this a lot in our area of the country. Things do need to go to underwriting more often than not, simply because we deal with oil tank issues all the time, and we're dealing with all sorts of very old homes that have all sorts of different things happening in them.
Within the last 6 months, the insurance companies across the country, it's not isolated to the Northeast, it's across the country, because of the severe weather-related claims and payouts, they are being more strict on what they're willing to now have that exposure for. Right. If there's one company insuring multiple homes on the coastline, and we get hit with a hurricane, that's a massive hit to one company to pay those multiple home claims. Yeah. So the companies are making strategic decisions on what kind of risks to take on and making those rates for us as consumers either more attractive or more expensive. When you get your renewal and your rates go up and your first initial response is, why are my rates going up? I didn't have a claim. Yeah. Collectively, we pay for each other. Right. If you and I are insured with the same company, we need to make sure our company is there for when I need them, because they paid for 15,000 other claims this year. Even though I didn't need them, I need them here tomorrow. Yeah. Right. And it's a hard pill to swallow, but that's insurance. We all pay premiums into a pool to be available for all of the insured. Right? I don't have to like my rate.
I don't have to like it.
But I have the choice to go to a different company. Yeah. And I've had clients call to say, you know, my rate went from $1,200 to $1,700. I'm so irate. And then I shop it around and I'm like, I shop it around with all the other companies. I'm like, any new company wants to charge you $2,000 to $2,400. Right. You find out you actually have a decent deal. Yes, you have a decent deal where you are, but there may be some things we can still change. Yeah. And it's that conversation. Like, are you willing to take a higher deductible to save on, like, there's things we can change without sacrificing coverage.
Yeah. Over time, our life circumstances change.
Yes.
You may have more money in savings than you had before. You may have less savings than you had before. You may have refinanced. You may, whatever the case may be, your insurance needs do change.
Yes.
And the one advantage, I suppose, of suddenly getting a higher rate is it makes you pick up that phone and review your insurance needs versus just sort of mailing it in. It affects the deductible.
Deductibles. The way I choose a deductible, the deductible is what you pay before the insurance company pays. So we have a deductible on our car insurance.
Yes.
And our home insurance and our health insurance. Everybody's used to have a copay or a deductible, right? So you pay out of pocket. So the way to choose your deductible is to take the highest deductible you are comfortable paying tomorrow.
Okay. Got it.
Especially new home buyers, you have a lot of expenses coming out.
Yes.
Maybe you want to take a lower deductible now, and next year when things settle, increase it. On homes, you could do $1,000 deductible, $2,500 or $5,000. Okay. Those are the average ones. Okay. When you say to the insurance company, I'm willing to absorb the first $5,000 before I even call you.
Yes.
They're like, thank you, here's a discount. So your premium goes down if you take a higher deductible.
Okay. So ways of reducing are to take a higher deductible. Mm-hmm. Okay.
Mm-hmm. And that's not taking away any coverage. Okay. So your coverage stays the same. You're just now willing to absorb more before you call them.
Excellent. Okay.
So one, take the highest you can afford, but then mentally think of your threshold as well.
Yes.
Okay. A lot of people will say, oh, it's only X number of dollars. I'm not putting in a claim for that small amount because claims will follow you.
Does the claim automatically trigger an increase?
No, not automatically, but what will happen. So here's an example.
Yeah.
I had a client years ago on his renter's insurance. So not a home buyer yet. His daughter's iPhone was lost or stolen. Okay. He paid a $500 deductible and got her iPhone replaced. Okay. Now that one claim removed a 25% claims-free discount that I could have applied to your premium.
Oh my gosh.
So his home premium for the new home he's about to buy was up $400 or $500 a year because of that discount. Wow. And his response to me was, had I known, I never would have put that claim in.
Wow.
So we want to be smart about our claims because they will affect you. Yeah. One claim every 5 years or so, it probably won't add up where it's not going to tack on surcharges and things. But when you get that second claim, that third claim, you're talking, you might be in a risk pool now. We want to save them for something that really matters, right? I had an ice dam at my house.
Oh no.
And
so for those of you who don't know what an ice dam is, it's when your end of your house, so ice backs up and goes up under your roof and causes major leaking.
Major
Those of us who grew up in the Northeast with lots of snow and ice.
Yes. Ice came in under the roof and leaked into my kitchen. And my kitchen got destroyed. So my kitchen had to get gutted down to the studs and replaced.
Were you due for a new kitchen?
It could have been updated.
Okay,
I wasn't sad about it.
Okay, good. Okay, all right. So silver lining. Okay.
But when the restoration company came in and tore it all out, they disturbed asbestos, unbeknownst to us, that was in.
Did they know that they had disturbed these? But they didn't.
No, nobody knew. So they tore everything out in March. We didn't find the asbestos until June. So between February and June, we were in the home. When the air test came back that the asbestos fibers were now in the air, they kicked us out of the home. We had to go to a hotel.
Of course they did.
So we had 4 cats, 3 little chihuahuas, and me and my husband on the street. We relocated to a residence inn.
Oh my gosh.
And my cats had to get boarded at a pet facility for 6 months. 6 months.
My gosh.
Yeah.
All because of an ice dam.
All because of ice. After that experience, I am so sensitive to the coverage and the details and putting myself back to that. What do you mean that's not covered? What do you mean I have to pay for this? Right. And when I'm talking to new home buyers that have never experienced a claim, never know what that feels like to just say, like, just get me back home again. Right. I paint the picture for them. Yeah. This is why I'm looking at these coverages for you.
My gosh, that's a great story. I mean, it's a great story, but it's a great
illustration. A great real life example. When you don't have somebody close by that has ever had to use this insurance you're making me buy, it just seems like you're paying for something you're never going to need. Yeah. And the day that something goes wrong, it's too late to say, oh yeah, I want to opt in for that.
Right. I'm asked, Jennifer, a lot about the difference between actual cash value versus replacement. Can you explain that to the viewers?
So actual cash value is more like how a car gets paid.
Okay.
So the depreciation is taken into account.
Ah.
So you buy a brand new vehicle, you drive it off the lot, it is already worth less than it was 10 minutes ago, right? So if that car is in an accident, they settle it for the cash value at the time of loss. So they take into account the depreciation.
They minus that 10 minutes of the lot. Yeah. Okay, good.
So now if you think about your home and everything in it, you want to rebuild new. Yes. You want the same as what you had, but if your home was built in the 50s, you want a 2023 building.
Well, some people though, all of that's coming back, right? So maybe you try to source the orange tile,
to buy a vintage avocado green fridge is going to cost more today.
That's true.
So what they give you a check for the cash value. Had, a black leather sofa, and it was, I don't know, a hand-me-down from my uncle. So I don't even know how old it was. So it might have been worth $50.
Yeah.
So here's your $50.
Yeah.
I can't go buy a new black leather sofa for $50. So the replacement cost, I get the $50, I go buy the new couch, I submit the receipt, and then they reimburse me the difference.
Yes. Okay.
So you can buy like new quality that you were lost with today's money.
Present day amounts of money.
Yes.
Right. Okay.
So with homeowners insurance, you want replacement costs on all of your contents. Lenders will require you to have replacement costs on rebuilding that home.
Interesting. Okay, good to know.
So if you're buying it for cash, you could potentially save money by not doing a replacement cost, but you could potentially not get your house rebuilt with today's money. When you're moving into a new home and you get everything set up, you're touching everything you own with that packing.
Right.
Take an inventory somehow.
That is such good advice.
Take an inventory, store it in the cloud somewhere. Don't store it in a fire, box that's going to burn with the house, but store it in the cloud somewhere where you can go back.
Jennifer, when a client reaches out to you, what information are they going to need to provide in order to secure a policy?
Full names, dates of birth, current address, the property address we're about to insure.
Okay.
How are you using the house?
Got it.
We ask about those swimming pools, those trampolines, any dogs, any activities. Do you have any home chefs or au pairs? Like, are there people living in your home that are employees? I'm verifying square footage. So, is it a colonial? Is it a cape? Is it brick? Is it vinyl siding? I rely on public records for some of those details. Okay. So the questions I need about the house, you might not get an answer unless it was disclosed on a property disclosure, or there's some permit on file with a date stamp. We might not know the age of the roof. Yeah. So we're relying on that home inspector to give you their best guess on the age and condition.
Are we giving you the inspection report?
No.
Okay.
So I won't. Here's the thing. I don't want to see an inspection report. However, some insurance companies are now asking for it when reviewing to issue a policy.
Oh, interesting. This is new.
This is newer, yes.
Okay.
So if they ask for the inspection report, it is so they can get their eyes on the risk and properly assess whether or not they want to insure it. This is a benefit. Ooh. Because if they say no, you want that no now, not after you've taken a policy and you're getting canceled. We don't want you to be canceled.
Okay.
One company, they might insure an asphalt shingled roof up to 25 years old.
Okay.
We had a client recently, the home was built in 1997. So it's 26, 27 years old. Original roof. Okay. They called their national auto insurance company, who got them a very quick quote with another home company.
Right.
And no red flags, no problems at all. They got their insurance. They sent it to their lender. They closed. Very shortly after the home is now theirs, that home insurance company did an inspection, which is very common.
Yes, so they come after the fact.
After the fact.
Yes, okay.
And they issued them an immediate cancellation because the roof was 27 years old. Oh. So my question is, how did this policy get issued? It's up to us as the agent to ask the right questions and many times
these houses are so old that we don't have the answer to that, an accurate answer. They've gone through many generations of different owners, and we don't know. Interestingly enough, something very similar happened to me. My rates went up I have a multifamily home, rates went up. I said, oh my gosh, and I called Jennifer, she was amazing. But I was able to work with another insurance company, and they offered me a slightly better rate. So I get the policy in the mail, I look through it because that's how I am, and I realize that they've made a mistake. They had it noted that the oil tank was above ground. And I had to call because I'm honest. And I said, hey, by the way, this is actually below ground, not above ground. And my rate went up. Not enormously so, but it went up. And I don't know how that never got flagged during the initial conversations, during the initial quote, but it didn't.
It's a very much set it and forget it, right?
Yes,
you get your renewal, you continue to pay your premiums, and you never do anything. So I had a client that lived in Connecticut, called me one day randomly to get auto insurance here in New York. So I'm looking, why are you getting auto insurance in New York?
Yeah.
Oh, well, I moved in with my girlfriend. Oh, how long ago? 4 years ago.
Oh.
4 years ago, the owner of the home left his home in Connecticut and turned it into a rental property, moved in with his girlfriend in New York, and never told his insurance company.
Minor detail.
And I'm like, oh, like if you had a fire.
Yeah.
That insurance company thinks they're insuring the home that you are coming home to every night.
Oh my gosh.
And now there's some random renter in it.
Yeah.
You risk them not paying. And the problem is you're paying premiums based on what the insurance company thinks is going on there.
Right.
And you've changed that entire scenario without letting them know.
Yeah. That's so important.
It may be just a rate change up or down because the scenario is changing. It may be we don't insure that risk at all. Very important piece, a vacant home that's listed for sale. This happens a lot where the client pays their insurance, but they've already moved to Florida and they left their house here to be sold. They have liability until the insurance company finds out you left it vacant. That's a completely different risk.
That's a good thing for agents to know.
Yeah.
Because we run into that all the time when we have listings. We have people who have left or who have multiple homes. And then we are able as agents to say, hang on, you know, what's happening while this is sitting on the market? Is it covered properly? Because that could really be an issue.
And the question should be, does your insurance company know you're leaving it vacant?
Yeah.
Because the standard market insurance companies that cover home insurance do not cover for losses once that home becomes vacant.
You talked briefly, Jennifer, about other types of policies, like I have an umbrella policy.
Yes.
Or I have jewelry insurance, or I have, you know, what are some other things that people come to you for?
Yep. So every time we're insuring the property, I always ask to look at the auto insurance. If you have a vehicle, that's a huge savings you can get by bundling. Okay. But the main thing I'm looking for is what your liability limit is.
Okay.
On the car, which
it.
Has nothing to do with the home you're buying, right?
Okay.
Until you crash and somebody's suing you. So let's give a scenario. You're in a car accident and you rear end somebody and they're suing you because they were injured. I was on a jury for a car accident case.
No way. I'm surprised they kept you.
Me too. I wonder who wanted me there.
I know. It's so interesting.
It was such a great experience for me.
A lawyer that day must have been like, yes.
That case settled for $300,000 for a single body.
Wow.
I walked out of there saying, I hope this family has an umbrella. Right? So now let's play that out with auto insurance.
Yeah.
You have the state minimum.
Okay.
If you have a license plate, you have to carry $25,000 per person.
Okay.
Well, you just lost a lawsuit that owes this person $300,000. Where's the other $275,000 coming from? You're going to lose the house you just bought.
Wow.
So when renters, first-time homeowners, I'm moving out of my parents' house, your lifestyle is changing with this home purchase. You need to review your lifestyle, not just the home insurance.
That is such sound
advice. What is affecting your future assets?
Right.
So I always recommend if you own a property, that's your first level of needing this additional excess liability. Right. So the umbrella policy is $1 million of just liability in case you're sued. So in that case, my auto would pay $250,000. My umbrella would pay the excess $50,000.
Right.
My assets are protected.
Wow.
I pay nothing out of pocket.
So this goes to that same thing we were saying earlier, that you have to review your lifestyle.
Yes.
I mean, that is such sound advice, and doing it over time as well, because our lifestyles do change, ideally in the right direction. Yeah. But that's so important.
The umbrella is there to protect your assets.
To protect the other assets. And I think that's what we forget. We assume that it's just attached to the one thing that we have it with. But in actuality, it's protecting the assets.
Protecting the assets. You want the insurance there to cover those losses.
Oh, this is so enlightening. I'm going to run home and check all my policies now to tell you. Jennifer, what is the most complex insurance situation you've ever run into?
There are so many.
Oh no.
The most recent one that
okay,
was,
go. Give us the most recent.
this was, we had a buyer client buying a home in Connecticut. The roof was old.
Okay.
It's like, I can't help you with this old roof.
Right.
So they went back to their agent. Whatever and again, I'm not a realtor, so however you guys worked your magic with this one, the buyer was agreeing to a very long closing date.
Okay.
And the seller agreed to fix the roof now so that when they take ownership, it would be a brand new roof.
Wow. Love
I
it.
don't know the details as far as if the buyer paid half or whatever, but it got done now,
yeah,
which allowed me to move forward with the insurance. So that was an amazing, yes, we got through that hurdle.
See, I love this story. This is so pertinent because we do have that ability. And if you start working with Jennifer early on and we find out the issues, then we are in a position while things are still in negotiation.
Yes.
Before, so here we are at the inspection stage. Now we've found out something that's going to impact insurance. Then we can actually still renegotiate. We can walk if we have to, but once you're in contract, you have to perform. We can't go back and renegotiate. You'll lose your money potentially if we try to pull out. So knowing all this up front puts us in a very powerful position to then go back to the seller and say, even if we pay for it, as a buyer, get the roof done now because then it's done.
And that's the thing. The seller could say, sold as is. We're not fixing anything.
Yeah.
The buyer could be willing to take it as is, and I'll deal with it later.
Yep.
But the buyer needs an insurance company to be willing to insure it
also
as is.
take it as is, right?
And that's where we run into the problem.
Yeah.
So all parties can agree, but if the insurance doesn't agree, you don't meet your lender requirement, you can't move forward at that point. So all parties need to be working together. And the earlier you can find these questions out, the sooner you can figure out how to deal with them.
Yeah. So if you've got issues where there's not a CO on a particular part of the property, and then the insurance company says, well, we can't, this is not legally an X, and so we can't insure this part.
Mm-hmm.
So all of that is, legwork that your listing agent should be doing up front as well, because then your listing agent is in a good position to make sure. And as a listing agent, I can even call Jennifer and say, I've got a listing coming. Here are some issues. Can we just be prepared ahead of time of what the buyers might run into so that we can be ready, right? So we don't often think of it that way, but because we're not the one who's going to have to, insure it after the purchase. But the listing could benefit from that kind of upfront information.
Yeah, you have knob and tube wiring.
Yeah.
Maybe
oh my gosh, right. Yeah. For those of you who don't know what knob and tube wiring is, that's another video, but that's very old. Very, very
old electric.
Yes.
There's certain things
or bus fuses, right? Yes.
If the seller's willing to make things updated prior to listing.
Yeah. Or as an agent, we can then make sure ahead of time that anybody looking at the house for purchase knows that there are some hurdles that are going to have to be jumped here, and so they're prepared.
And the big thing is, it can be insured.
Yeah.
But again, it might not be the price you want.
Right.
It might not have the bells and whistles of the additional features that you want. But you have to insure it for whoever will insure it as is. Get through the closing, make it yours, fix the roof, and then call me back. And I've had clients do this.
Yeah.
Where now you have a brand new roof. You're actually getting a discount.
Right. Love it. Love it. Marry the house, date the insurance premium if you have to. We see loads of commercials all the time. We can pick up the phone. We can call Geico. We can call Liberty Mutual. We can call these companies. What is the benefit of going with an agency like yours?
So when I started, I worked for a major company as a direct employee, licensed only in Connecticut. And when I came here to this agency, now I don't work for any insurance company.
Okay.
So the way my mindset is now is that I'm a consumer just like you with a license to know what I'm shopping for.
Ooh, I like that.
Right?
Okay.
With homeowners, there's different packages.
Yeah.
And you could be getting a package that has all these bells and whistles versus the same company with a level, like stripped down package. You're not going to have the same claims experience.
Yeah.
When that claims adjuster comes in after a loss, one policy might have everything that they need where they can just take care of it. And the other one's like, well, you decline this, you decline this, you decline this. You're not covered here. You're not covered here.
Got it. Okay.
So I'm getting quotes with multiple companies, but I know how to put them on as level as a playing field as I can, because there's major differences. Point out what is important here. Why is this price different? And what I would suggest to you, I might not suggest to Bob down the street.
Got it.
Right? Their family dynamic is different. Their concerns are different. Their flexibility for their options are different.
Okay.
So we're tailoring it to what is important
like
to you while looking for the best price for that coverage.
Okay.
So I look for coverage first and who's going to give me the best price for that instead of who's giving me the cheapest price,
right,
and not realizing what I'm missing in the coverage.
Something else I think that really adds value here is it's a lot of work to pick up the phone and call all of those vendors. And then since we're not necessarily the experts in this, or probably not at all, trying to compare apples to apples to figure out what the differences are between the policies could really leave a gap in that person's coverage.
Yes. When you, the consumer, pressured to hurry up and get your insurance so we can get this clear to close, you're shopping very quickly to check it off a list, not realizing this is the most important part.
Right.
This is the part that if anything goes wrong, you make the decisions today for what you have protected tomorrow.
Right.
And you really got to take the time to do it. And you don't have that time, which is why you kind of put it on the independent agent to help you.
Yeah. Well, and I love too that you're not working for any one particular organization. So you're neutral, which is great. They're there on behalf of the client, which is the way I as an agent work with my clients.
Right.
So that's really, really important.
Want to start shopping for insurance very early in the process.
Okay.
The best time to call me is when your offer is accepted right around inspection time.
Okay. Before
very early.
Even you're in contract. You want accepted offer around the inspection time.
Around your home inspection.
Good. Because there's no cost to doing the work.
No cost at all. No cost at all.
So even though you're starting to engage this process early, you're not paying anything until the deal is happening, until you're going to close it.
And even then, you don't pay me directly at all.
Oh, good point. Yes.
So I get paid, I have a salary by my company.
Right.
But the insurance company that we end up placing the business with pays our agency a commission for that business. So there is money exchange.
Right, of course.
But you are not paying for my services. You could use me as a resource through the whole process and end up not buying anything, and you walk away with nothing out of your pocket.
Okay, got it.
And that's what I want people to understand is call me with questions.
Early.
I've had clients say, I didn't want to bother you because I don't know if they're going to use you. I don't care. I want to be the resource.
So you're not paying your insurance agent directly, just like you're not paying your real estate agent directly either.
Yeah.
So get us involved early.
Earlier the better.
Yes.
Be as upfront and on the table and exposed as you can, because it's the agent's job to find the right coverage for you. And when I'm doing my comparison, I'll call your auto insurance, get a quote, and then call me and let's compare.
Yeah.
And I'll say, send me the quote. And sometimes people will black out don't black out the information because I really just want to do my best job the first time. Okay.
And it's a little bit of a red flag. Instead of blacking it out, you should just plant a red flag on it. Why are you blocking this out?
A lot of times and it's false, but a lot of times the consumers think, well, if I show them what I'm getting, they're either going to just undercut it, and they think they're not getting the
right.
I can be nothing but honest because my rates don't matter what you're paying. It's what this company is willing to charge.
Jennifer's, what she's making isn't impacted by what you end up getting charged either. There's no correlation there.
Correct. So I do my best work with everything on the table.
All the info. So, and by the way, so do agents. I have this happen a lot where, I don't really want to tell her that. And then suddenly 6 months in, I find out that no wonder you didn't like any of the places I've been showing you because there was a deal breaker on every one of them that you didn't tell me. So tell us.
Best advice when you're shopping, shop for your total cost of insurance. So we talked about an umbrella. We talked about the auto, the home. Do you need flood insurance? That's another expense. We
won't open that can of worms today, but
so that's another expense you have to consider. Do you have a jewelry rider? That's an expense. So people will call me and say, well, your home rate is better than this home rate. Let's go with that. But what they're missing is the multi-policy credit or the impact on the auto if you only move the home.
Yeah.
So like Geico, I got a mailer just like anybody else. We could save you $600 on your auto. So I called. And they could. Yeah. And then it was right after my home claim. When I gave them my home insurance, it was going to be $800 more.
Yeah. So there you've lost money.
I'm going to pay
spending
you
$200 more in that deal.
I'm not leaving. Even though the auto looks great, overall, it's really not as great as it looks. Your net number is where you should make the decision because that's the real impact. And when you do policy to policy, you're missing out on the bigger picture.
The other advantage of that too, Jennifer, is then you are able to look at a person's lifestyle. And you're able to look at how things are changing over time. Whereas if you're just looking at one piece with blinders on, you're missing a whole picture. That's really important for people's asset protection. It is the most consequential undertaking of your life to buy a home. And so you should treat it as such with really good insurance.
Yeah.
So Jennifer, you have been such an asset.
Thank you.
Thank you so much. Speaking of assets, you've been such an asset to my clients today. I'm so grateful to have you here. Thank you.
Thank you so much. This was great.
Oh, it's my pleasure. My pleasure. I'm Zebby Amy Voss, talking to my insurance SME, Jennifer Crowley, and we together are helping you write and insure the next chapter in your singular story. Thank you for watching.